Perfect. All right. Good morning, everybody. My name is Chris Schmidt. I'm the agency owner of Brightway Insurance here in New Orleans. We also have a shop in Pensacola and one in Charlotte, North Carolina. We write business in Texas, Louisiana, Mississippi, Alabama, Florida, South Carolina, and North Carolina. So all the coastal states, which means that we are going to be very impacted, as are y'all, by this new flood program. So I've asked our director of insurance, Carl Duvino, as well as two of our senior agents, Lee Miller and Laura Adam, to join the call. What we'll do is we did a couple of these last week, and what seemed to be the most productive way to do it is I'm going to give you kind of a quick overview of what the program is. Some of y'all may already be familiar with it, but I'll just kind of go into a little bit of a deep dive, but not too far. And then if you have additional questions, we'll provide the contact information for Carl, Lee, and Laura, and they may be able to answer some additional questions for you. As well as after the call, we have a bulletin that's been put out by FEMA. It's about a 10-page kind of white paper that tells you a little bit more about the program, and we'll email that to each of you. Unfortunately, this has just kind of gotten dropped on us as much as it has on y'all. So FEMA has not put together a slide presentation that I can really show you at this point. As soon as that becomes available, I would definitely send that out to you as well. But on the calls that we did last week, what we found to be pretty productive is just doing kind of an introduction to what the program is going to be. And then we'll just open up to some Q&A, because I'm sure you all have lots of questions, as do your customers. And then I'll just try and answer anything on the fly that I can for you. So I guess kind of an overview of the program and what's occurred here is that, so as you're all aware, the NFIP, which is the National Flood Insurance Program, is a division of FEMA. That program has been operating for quite some time in different capacities. And what's occurred is there's a $50 billion deficit in the program. So the government, in what can only be described as an effort to get out of the flood business, has changed the way that they're going to rate flood going forward. The problem with it is that they didn't really give anyone a heads up on how this was going to occur. We actually had the senator from New York, Chuck Schumer, and the senators from Louisiana, Kennedy and Cassidy, who were both trying to get this program to be put on pause. Steve Scalise, who is the local rep in Metairie, also tried to get this put on pause. One of the other things we're going to send to you after this meeting is you can contact your congressmen and your senators and ask them to put this program on pause, and we will send you that link so you can do it. I think that this is basically what the gentlemen in Congress were trying to explain to FEMA, is that we understand there's a deficit. We understand that this program has to change, but the way that they're changing it is going to be devastating to any of the coastal states. FEMA is selling it as only 4% of the United States is going to see an increase in flood insurance. And that sounds like a great program for the person who lives in Cincinnati, Ohio. But when you live in Southeast Louisiana, or you live right on the Atlantic in New York, it's going to be a massive issue for you. So the 4% of people that are going to see the rate increase are going to be the people in our area. And we're seeing massive rate increases, which I'm sure, as I talked to Kara the other day, part of the program, as I'm sure you all are seeing, ex-flood zones are jumping from 572 to 2,200, 3,100, which is just not going to be tenable for people in this area. So the reason that kind of segues into the reason why that's occurring.
Did you see Bobby's? Yeah.
Good. Oh. Okay. So that kind of segues into what's occurring with the program. So one of the first things that's occurring with the program is that flood zones are going away. There will no longer be X zones, A zones, AE zones, BE zones. Everybody's just going to be in one large zone, and it will be based on characteristics of the home. So the foundation of the home, the age of the home, the building materials of the home, so whether it's frame, masonry, veneer, all that is going to impact what the rate is. So one question I'm sure comes to mind that when I did a couple calls with lenders last week, and I asked them this question and they did not have the answer. They were going to seek it out, and we'll be happy to share that answer with y'all. I said, okay, so traditionally, if a home is AE, the borrower is required to carry flood insurance. And if it's X, they're not. So how is the lender going to make that determination now that they're no longer flood zones? And they said they had not asked their investors that question. Their investors had not brought that question to them. I think where things will probably land, and based on conversations with my team, I think that's where we all think it's going to end up. eventually it will be where if you have a mortgage, you'll be required to carry flood insurance, regardless of if you're 12 feet in the air or if you're on a slab in Grand Isle. You're going to be required to carry that flood insurance. The positive out of that is I think that the banks will start escrowing flood insurance, which has been a major problem in the program for a long time. Americans, because we have a large percentage that tend to live paycheck to paycheck, they can't come up with 572 on the fly, but they can come up with $50 a month in their mortgage and make those payments. So I think overall for the flood program, it will be good that you'll have people that are now able to escrow their flood. The problem is people were hoping to escrow 572, not escrow $3,100 because they're on a slab home in Algiers. So I think that's going to be one of the things that will be a positive about the program, but they've got to come up with a better system. When we're seeing the way that people are rating these homes now, and I guess what the main goal is they want to see homes in areas like Southeast Louisiana, in Houston, along the coast in South Carolina, along the coast in Alabama, Florida. They're wanting to see that people are elevating these homes. The problem with that, as we all know, is most people's price point for a home is going to be, and y'all know this better than we do, but the price point for most people's home is probably somewhere between 150 and 250. Well, if you're suddenly taking a home and moving it from slab to where now it's got to be on piers, posts, or piles, which is a significantly higher cost, you're going to suddenly be pricing people out of those homes, or you're going to have people who are going to be able to afford a lot less home because they're going to have that that elevated foundation, which is going to really limit their buying power. So I'm not sure how they're going to handle that. I think one of the things, in my opinion, that we've seen as well, that I think will possibly put the program on pause, especially if you have enough people along the coast that go to their senators and their congressmen and say, hey, you've got to figure out a better way, is you have two demographics in this country that are very powerful that I think could potentially put this on pause. One of those demographics is going to be your senior citizens in the United States. And this is why I think that they are going to be impacted by it. So there's a new program called Glide Path, which is how FEMA is going to raise the rates on existing flood policies. So right now, if you have a $572 X-Zone policy currently as of September 2021, FEMA is telling us that they feel that those policies should actually be closer to $1,200. But they recognize that they can't just suddenly raise everyone's rate by $700, or people would have to move out of their homes. So what they're doing is they're actually going to put people on this program called Glide Path, and the Glide Path program will raise the rate of this insurance by up to a maximum of 18% every year. However, you still look at, if you have senior citizens who are on a fixed income, if you were to suddenly have a $600 increase, even if that increase occurs over a 4-year period, somebody on fixed income cannot afford a $50 pop like that for just flood insurance when they have other things, whether it's taxes or just the cost of living increases that naturally occur. They're not going to be able to afford that. The other program that you have that's very popular and very prevalent in New Orleans is you have the community development program. So the community development program, as I'm sure y'all write loans through, as it stands now, you have to have 1% deductibles, 1,000 or 1% deductibles, but also a requirement of the program, because as a second mortgage on it, is you have to have flood insurance. Well, we've all had those deals where we've had to call our insurance person and go, look, I've got it down to 1,200, but I need you to get this to 900 or we can't close. Well, that's with a flood policy. That's at 572. What happens when that flood policy becomes $1,200? Well, those loans are no longer going to be, we won't be able to close it. The lender's not going to be able to close those, which is going to have a devastating impact on the Southeast market here in Louisiana. So I think those two demographics, in fact, you have these community development programs across the country, and you also have senior citizens that are going to be drastically impacted by this. Once this gets rolled out and more people become aware of it, I think that you're going to see a pushback on this. I think my personal opinion and what I've read on Google, different websites, is that I think there's going to be a 1-year pause on this program. I don't think that pause is necessarily going to come in the next week. I do think it'll come in the next month. I think as people find out more and more and people start going to the closing table and they're like, wait a minute, how did my flood that I got this quote back in August and was 572, why is my flood now $2,200 and I can't buy this home? I think that's when you start to hear the squeaky wheel, and I think that's when they'll start to find the grease. So I think that's probably going to take a month or so for that really to get out there. So I think that for the next several weeks, it's going to be a little bit touch and go. But I do think that, and somebody told me, they're like, oh, do you think FEMA will really make this change? People forget after Superstorm Sandy, which occurred in New York, FEMA came in and decided they were going to raise these rates significantly. Like they wanted to do 50, 60% increases because they recognized there was an issue with the flood program in New York. And as soon as people looked at what it was going to do to the housing market in New York, they scrapped the whole idea. I think this will be a similar situation. I think my team and I believe that there needs to be changes in the flood program. It's untenable for us to continue to have $572 flood policies in LaPlace, and then they get absolutely just smoked like they did in Ida just a few weeks ago. And now FEMA's going to be paying out tons of money. So they have to find a way to improve the system. But I think that what they're doing right now is going to be too devastating as far as the impact on people's pocketbooks for them to continue this. So that's kind of where the program is at this point. One thing I think that we are seeing is a question that we're getting a lot is about elevation certificates. So the problem with elevation certificates is they may or may not have an impact on flood insurance going forward. So we are obviously going to encourage people to get them. We're still looking for some guidance from the NFIP on how they're going to impact the rates. What we've been told thus far is they're going to have little to no impact on the rate unless there's a significant difference between the base flood elevation and the actual elevation of the home. So if you have a house that's been raised after Katrina, like there will be an impact there. But if you have a home built in 1965, which is a lot of homes in Metairie that are on slab, an elevation certificate is probably not going to help those individuals. And that's why I think that you're going to have to see this program have some type of amendment, because there's just no way you can't run all these people out of their homes simply because they can't afford the flood insurance. But that's how ECs are going to impact. One thing that Kara and I talked about the other day and was about severe repetitive loss properties. And Kara, actually, I got some additional clarification on how those will be treated. The way it stands right now, and just for those who may not know, a severe repetitive loss property is any property that has had 2 losses in the last 10 years over $1,000, or within any 10-year period over $1,000. So you have a lot of homes in New Orleans that had that because in 1995 you had a flood in September, and then obviously we all know in August of 2005 you had a flood in August. So a lot of people's homes fell within that period where they missed it by a month. And so if they filed that claim in September of 1995, and then they filed that claim again in August of 2005, they're severe repetitive loss. And so those properties, traditionally, the way they were treated was that it'd be a submit for rate. So you'd have to send it into FEMA. They would look at the base flood elevation, and they would just send you a number. And to be honest with you, I have no idea where that number came from. It seemed like it was very much being pulled out of thin air, but they would say, hey, this is going to be the flood insurance. What the new program is going to have for those severe repetitive loss properties is that they're going to treat them just like any other home. The caveat to the buyer on that is the NFIP is no longer going to force sellers to disclose that they are in a severe repetitive loss property. I don't see how that's possible. I don't see how that, I'm not sure who came up with that part of the program, because it seems that you're opening yourself up for litigation. If somebody were to buy a home, the home floods, 6 weeks after they bought it, and then they go back and they look, oh, this home flooded three times previously, and the seller never chose to raise it. So again, that's some clarification, Kara. But I misspoke on Friday when we talked. I was under the impression that severe repetitive loss properties were going to be treated the same way they have, but I got some additional clarification, and they're not. They still will be a submit for rate, where you'll have to get a price, but they no longer will have to disclose that home has been flooded in the past. One additional thing about that program, though, is if the home floods after this, you have it in this new program, they will immediately raise the rate to whatever the old submit for rate pricing would have been, which again, the more I read about this program, the more confusing it becomes, because it sounds to me like they are trying to, and some of the words that I saw in the explanation is that they're trying to punish people who live in flood zones. They think that, it'll be easier to give people in Michigan and Minnesota these breaks on flood insurance, while people along the coast, Texas, Louisiana, Florida, they will now have the whole flood program being subsidized by those areas. The problem is Louisiana, Mississippi, Alabama, three of the poorest states in the country. So you're going to see a massive impact to the housing market if you suddenly raise these rates on people in these communities, because they're just not going to be able to, they're not going to be able to afford it. So I know that is a kind of like a very macro level visit of this program, but the reality is I think FEMA and NFIP, based on what we've seen, are still trying to figure out some of the specifics. And like I said, I do think that within the next month, you're going to see them put a pause on this program. And I think there'll be like a 1-year moratorium so they can figure out a better way to roll this out to people, because it's just going to be very impactful, especially to our housing market here in Southeast Louisiana. So that's kind of it. Like I said, I think that probably the easiest way to go from here is just kind of open up to some Q&A. And if people have questions that I can answer, I'm happy to do that.
I have a quick question. So as of right now, they're saying October 1st is the first implementation of some of this, change. And then April 2022, they're rolling out with something else, right?
Great question. So October 1st is for any new flood insurance policies. The April 22nd number is for any existing flood insurance policies. So if your policy renews October 15th of 2021, you're a current flood policy holder, you are not going to see this impact until next October 15th. If you are someone who has a flood policy that renews on October 23rd, 2022, you will be a part of the new program. So I guess the positive there is that for anybody who is renewing between now and April 22nd, they are not going to see the impact of this program. It's going to mainly be for new policies and then anybody renewing after April 22nd.
What things would make a flood policy lower? If the elevation certificate doesn't matter, you mentioned that they were curious. I mean, if the house was brick or wood, like what houses should we be looking for, to kind of, and how can we have any idea as to if there's before we always look for flood zones and things and elevation, like what should we be looking for to hopefully find a house for our clients that isn't going to, spurn some ridiculous quote?
Sure. So what we're seeing thus far is homes on slab are the ones that are getting just crushed. The homes that are elevated, so the homes like over in Fontainebleau, the old homes that are raised up, we're not seeing those rates for those homes. I think what we found thus far is this is going to be all elevation based. But the problem with that is you can't come into a 300-year-old community and ask everybody to raise their home. I mean, it'd be the cost, unless FEMA is going to provide all kinds of money for people to raise their home. Once again, I know they did that after Katrina, but I mean, you would literally have to go into some of these neighborhoods and raise every single home in order to get this to work. But so far what we've seen is the slab homes are the ones that are going to be most impacted by this. So homes that are, the duplexes that are on, pier posts or piles, they tend to be getting a more favorable rating. The ones that are on crawl space are getting a more favorable rating. It seems like the slab homes are the ones most impacted.
How do you think this is going to affect Metairie? It's funny, if you look at the flood map in Metairie, the houses that are in non-flood zones that don't happen to be right by the river, it's so funny, you can almost, chuck a rock and 30 foot from it, it'll either be in a flood zone or not flood zone, that those things come so close to the houses there. But what about those houses, close to the lake that are in non-flood zones on slabs? Do you think they're still likely to go from being a non-flood zone to a 3,000 square or a $3,000 policy now?
Yeah, so that's what we're seeing, right? Is that there will no longer be flood zones, which I don't understand what the strategy is there. But there will no longer be any type of, and that's where I think you're going to see the real change. I don't think the lenders, and the problem that we have right now, not to get off on a tangent, but the problem that we have is that the lenders now, none of them hang their own paper. Everything is investors, right? So you don't have any of these banks that are really holding any of the actual loans. So I think what's going to be impacted here is, and I will be the driver, which that's why when I had the call last week with one of our lending partners, I asked it, and they were like, yeah, we really haven't heard from the investors on this. There's no way that the investors are going to allow homes that previously were AE to not carry flood insurance, but there's no longer an AE designation for any of these homes. So I think the way that they tell people this is who has to carry it, which I think where this ends up is anybody with a mortgage is going to have a flood insurance policy. And I think, and that's what I was saying, I think that they will allow them to start escrowing it. But I think that these homes, and I saw one of the questions that popped up was about homes that not previously flooded. That's a great question, because how are they going to treat those homes? They're homes in Old Jefferson that have never had a drop of water in them, that are on slab, because it's just, they've got good levee protection and it's one of the higher areas in the city. And now suddenly people who've been in X zone, who've been, subsidizing the flood program by carrying flood insurance, they're no longer going to carry that flood insurance, because they're going to look at it and go, I'm not paying $2,100 when I live in an area that hasn't flooded in 150 years. And I think so what FEMA's trying to accomplish with this program by getting people, by raising the rates on people, is actually going to be counterintuitive, because people who have been paying for this flood program for quite some time are the people in X zones who haven't flooded, but they recognize, hey, probably want to make sure that I have flood insurance. All those people are going to give up their flood policies, and it's going to create, I think it's create a larger deficit in the program.
Didn't we do this like 5 years ago? It was like Frank Dodd or something like that, where they threw out these really high rates. It created pandemonium. They ended up repealing it and it got scrapped. But I feel like we did this several years ago in another form or shape.
They did have something they tried to roll, I think in 2015 was when they tried to roll that out. But also they tried to do it again in New York after Superstorm Sandy, and it got shut down. Because so many areas, again, Texas, New York, massive states with lots of people living on the coast. Like, I think that's where you will see this. That's why I think this will get shut down, is because I think they're going to look at this and they're going to hear from their constituents, and you have such large population swaths that live in those areas that I think they're going to say, there's no way this is going to crush the housing market in Houston. This is going to crush the housing market in New York if you do this. And while Louisiana, we obviously want to believe that we also are important. You're talking about, a very small percentage when it comes to Texas, population when it comes to like Texas and New York and Florida. So I think those are the states where you'll see they're going to shut this down. And I think really the way that this is kind of fallen through the cracks is that so many other things, as we all know, have been going on since March of 2020, that it almost feels like FEMA kind of took advantage of a situation and kind of slipped this in when nobody was looking. Because I think had people been more aware of this, especially given how strong the housing market has been across the country, I think there would have been a lot more clamoring about this, and people would have wanted a lot more explanation. And I think that's what you're going to see over the next several weeks, especially when people start going to close and they call their insurance agent. And they're like, oh, I remember, I said earlier, people will say, you gave me this quote for flood of $572 back in August. Why is my flood jumping to $2,100? And now either I'm going to have to come out of pocket an additional $150 a month, or I can't close on my home. And I think that's when you'll start to see the pushback.
Are these prices going to come into effect on October 1st or October 15th?
October 1. Yep.
So any quote that I've gotten in the past week or two is probably not
unless you close before. And it's literally when we go into our rater, when we put something in for September 30th versus October 1, there's a massive jump. And so it definitely will impact. So if you have anybody I guess my advice would be, if you have anybody looking to close on October 1 or October 2, you might want to see if you can bump it up, talk to the title company and see if you can bump it up to September 30th, because there will be a significant savings.
I have a client that they're closing in October, but the seller already has a flood policy on the house and it doesn't renew until the 1st of April. They can just assume that policy.
Correct. Yep, absolutely.
Then the situation will be different.
Yeah, so that's a great question. Yeah, so as far as assumptions, nothing is going to change with assumptions except for it's so in your case, when does that policy renew?
It renews April 1st, 2022.
Okay, so actually that person will get the renewal in what's called the legacy program, which is the program that we're in now. So that person, but if they were renewing on April 23rd, they would be forced into the new program. So they will get to keep their, by assuming that policy, they'll get to keep that rate at least for the next year.
Okay.
Chris, any chance this opens it up to private flood policies?
Oh, great question. I should have addressed that. That's one of the things that we're seeing right now is we are seeing some private flood insurance start to come in the market. Historically, private flood insurance has not even been an option in Southeast Louisiana. We have 3 different private flood insurers that we're working with now, and the guys on the team, Laura and Lee, they will tell you what we do is we will rate it through both because we're seeing that sometimes the NFIP program is still the cheaper out of those. But we are seeing private flood insurance become more of a player in the market. And we are, from our standpoint, we're looking for additional options. And hopefully, most private flood, just is written through Lloyd's of London. And I'm sure y'all probably have heard of Lloyd's of London. So it's all these different syndicates. So what we're looking for is to see if there's some other syndicates around the country that may be interested in writing some private flood in Louisiana. Brightway as a company is trying to look at that and see if we can get some additional markets that will come in to compete with the NFIP. But yeah, good question. That's absolutely, they've had that in like central Louisiana, northern Louisiana for quite some time. You have private flood that's a major player, but we haven't had it in this area. But if we're going to have flood policies of $3,200, I think you'll see private flood start to become more of a player.
Chris, hi, this is Dina. I hopped on the call a little bit late, but I have a question. I heard you mention that flood zones aren't going to matter so much anymore. I'm curious, my husband is a builder. If new construction it's raised, it's on piers, and it's built, say, 12 to 18 inches above BFE, would that matter for?
Absolutely.
Okay.
Yeah, that's absolutely no. It's a great question, and that's exactly what we're seeing. Is that if you build those homes elevated, you're going to get a good flood rate. So this is what I think is going to be the other piece of it. Is that and your husband, I'm sure, will be able to speak to this. Is like it's going to be this additional cost for builders. So some of these communities that builders go into and they're able to put 10, 12 homes like at a very effective price for people. That's all going to change because they were able to do that by just going in, laying a slab, building the home on top. If now they're going to be required to put, piers for every home, that's a significantly higher cost. And so the price point for those homes is going to jump significantly. So I think that overall, this is just going to be very impactful to anybody who touches anything to do with home building, real estate, home lending, anything. I think it's going to be very impactful. Let's see some chat. Let's see. Yeah, I've been looking. I just saw one of the questions about homes that previously flooded. One of the other things that we talked about that's going to be an issue is that the NFIP is no longer going to list whether homes have previously flooded. So there will be no impact to a house that, according to the way the program is written today. And that's one thing, just to kind of put a disclaimer on this video and on this Zoom call, is all this is the way the program sits today. So I think that what I'd like to do is be able to update y'all as it goes forward, because I think there's going to be significant changes over the next 30 to 60 days in how this program is run. I think once it starts to roll out and people see what the impacts are to the housing market, I think there will be changes. But to that particular question about if a home is previously flooded, it's not going to impact the rate. And in fact, it's not something the seller's even going to be required to disclose anymore, which I think is just interesting. But that's the way the current program is written.
Just out of curiosity, how much does it cost to raise a house? Does anybody know? Like you're just run of the mill slab house in Metairie. Like what does it cost to raise it?
I don't have an exact answer. I don't know if somebody else has an answer to that, but I've heard, I was under the impression it's somewhere between like $30,000 and $40,000 to raise a home.
Depending on the home, yes. In Metairie, I've had experience where a $38,000 quote from, I believe it was Davy Shoring, was given to raise a home that was approximately 16 to 1,800 square feet.
Okay, any other questions?
Chris, I'm not sure if I missed this and I apologize, but about the elevation certificates, are those being used to determine each individual house's elevation, and then that's where the Risk 2.0 will evaluate their flood premium?
Yeah, good question. So the elevation certificate is no longer going to be required for homes. The elevation certificate may or may not impact the home. So I think what you will see is that everybody is going to be required to get one because the rate's going to be so through the roof that people are going to say, okay, well, I'm going to at least get this elevation certificate and see if it can impact it. But what we're being told by FEMA at this point in time is the elevation certificate will no longer be required because there won't be flood zones. And before, as we all know, if you were anything other than X zone, you had to get an elevation certificate. FEMA is now saying, hey, you don't have to have an elevation certificate, which, by the way, going back to a question, and this kind of falls in line with the question that was asked earlier about private flood insurance. So what NFIP is doing right now is they are actually trying to become more like private flood insurance. So private flood insurance does not use elevation certificates. The way private flood insurance is, it's based on historical data. So they look at homes and they say, okay, we found that in this particular area, homes of this construction, of this elevation, have this percentage chance of flooding once every 100 years. And that's how private flood is. So, because we don't turn in elevation certificates for private flood insurance when we write it. The NFIP's program was designed where it said, okay, yes, we'll take that into account, but if we have this elevation certificate, it'll improve the rate for this person because we can look and say, well, the base flood elevation is -3, and these people sit at a +1, so this will be the rate for them. So what the NFIP is trying to do here, and I'm sure this is from a cost-cutting measure, it's also just from like an administrative measure, they're just trying to become like private flood insurance. But the problem with that is that private flood insurance in our area has not been cost effective for people, and it still won't be cost effective. So when to the point earlier when I say about, yeah, we're looking at private flood, we're running in it, and the NFIP is coming at 22, and we're getting a private flood quote for 17. That still is devastating for somebody who last year would have been paying 572. You're still talking about tripling the price on these individuals. But to answer your question about elevation certificates, it's going to all be depends. I think everyone will eventually have to get one just because the rates will be through the roof. So they've got to see if the elevation certificate in some way, shape, or form can help them. But we have not received an indication that getting an EC is going to have a massive improvement on the pricing for individuals. Now, if you're in a home that's on the North Shore that's 12 feet up, obviously that's going to be significantly impactful. But somebody who is on a slab home in Kenner, we don't have any indication that them getting an elevation certificate is going to make a massive difference in the price. Okay. So what should buyers be looking for or doing at this point? It's one of the questions on here. That's a really good question. I think that what you should be looking for is something that's not on slab. That's what we're seeing. Those are the homes that we're seeing are being most impacted. Again, I know I keep going back to it, but I really do feel like this is a program that's going to get put on pause. We're going to send you that link. I really would encourage you and your sellers, your friends, your family, whatever, to reach out to. It's a really easy. You can send an email to the senator and the our Congressman Scalise here in Jefferson, and you can ask them to try and put this program on pause. They are very aware of it. In fact, John Kennedy, the senator from Louisiana, wrote an article at the end of July that was like very, very critical to FEMA, and he tried to get this pushed through in July for a 1-year moratorium, and it just kind of went by the wayside. I'm not really sure. I mean, I don't want to make this a political meeting. I'm sure we all know what's going on in politics, but it's like I keep telling people, anytime you can get a senator from New York and a senator from Louisiana to agree on something, that probably tells you that there's a problem. So I think that that's what's going on right now. So I'm definitely, I think that this will get put on pause, but I don't know what to tell a buyer other than try and close by the 30th. If you have one of those early October closings, try and see if you can get the closing done. Otherwise, we'll continue to give you all updates as we get updates from FEMA. The rates are going to be determined if they're no longer be flood risk zones. So the rates are going to be solely determined on elevation and construction of the home, and historical flooding. Those are the 3 things that are going to impact the rates. So if you have a home that is an area that has historically flooded, that's built on slab, that's built out of frame instead of masonry veneer, you're going to see those are going to be the homes that have the highest increases to their flood. Can they purchase flood insurance now? Okay, here's a good question. If a seller is currently in a flood zone X but does not carry flood insurance and is closing their property early October, can they purchase flood insurance now so the buyer can assume the policy at the current rate? The answer to that is they could have bought that last week if they were closing they could have bought it at the beginning of the month because there's a 30-day wait. So if they buy it now, they would have to put it out 30 days, which today is the 20th. So they would have to put out the October 20th. So they would be in the new program. They would no longer be able to have the legacy program. It's a good question.
So for houses that are raised, you're raised, you're built above base flood, you're like uptown in an X flood zone and you're a historic raised house, what can we expect those premiums to look like? Will they be significantly different, or are we just talking about houses that should be raised?
That's a great question. So actually some of those homes we're seeing, the rates are improving. So yeah, it's
I read a couple articles, it seemed like actually some people's rates, if you're a raised house and I know flood zones don't matter, but if you're a raised house, this actually could be beneficial.
Correct. Oh yeah. And that's how they kind of sold it, is they said only 4% of people are going to see an increase, but literally all 4% of those people are on anybody on the coast. And I think what the purpose of the program is that, number one, the government's back again to that private flood insurance question, is that the government's trying to get out of the flood program. Which is a good thing down the road. It's like Louisiana Citizens Insurance. You don't want the state of Louisiana insuring your home. It's not, some of the stories that you're reading of that people are having challenges with their homeowners insurance right now, it's 10 times worse with Louisiana Citizens than it is with a private insurer. The same situation is going to happen here, is that same situation with the government is trying to have, they're trying to get out of the flood business. They're trying to push this towards private insurance, which, if you're in the middle of the country, that's not an issue for you. But if you're on the coast, it's going to be, significantly higher. So to your point, what's going to happen is it's going to increase the number of people that are going to raise their homes. So as we just discussed, it's going to, where people come up with $30,000 to $40,000 to raise their home. So it's either you pay $3,000 a year for flood insurance, or you go spend $30,000 or $40,000 to raise your home. And so I don't really, it seems counterintuitive to me from the standpoint of, is FEMA going to, I know that's who was sponsoring all this previously, but is it worth FEMA spending $30,000 to $40,000 to raise people's homes, just so people don't have to have a $3,000 flood policy? I'm not sure. And one of the other things I thought was ironic is that President Biden has, part of this program, has approved $348 million for low-income areas to help them buy flood insurance, which seemed very interesting to me, because it was like, why don't you just lower the program overall for everybody with that $348 million rather than raising the rates on everybody and then offering these subsidies? It didn't really make sense to me. But again, I think there are just a lot of there's a lot of discrepancies in the program. I think there's a lot of unknowns in the program. And I think as those things become clear to us, something that we'll continue to bring to market and share with you all. But I think right now, the way the program is written, it's just very confusing. And I think it's going to, for a very short period of time, I think it's going to have an impact on the market. But I do think that this is something that's going to get paused. take one more question in the chat. Nope. Okay.
Alrighty, everyone.
I think
I'm
that's
sorry.
it. Yeah, Ron. So yeah, no, I was just gonna say, I think that's great. So thanks everybody for your time. We will follow up with an email to everybody, and like I said, we have that bulletin. It's about a 10-page white paper that we'll follow up with. We'll email it over to you as things roll out with this program, which I think in the next probably 10 days you're going to be hearing a lot about this. I think some things will change. We will make sure to keep you updated. Maybe just do like a group email, just say, hey, this is what we found out, and we won't email you unless it's going to be something of significance. But just to keep you all kind of in the loop of where things are at, we're happy to do that.
Awesome. Yeah, we want to thank everyone for coming out again and tuning into the Zoom. If you missed any of the meeting here, we will put this up on the Snap Realty YouTube page, and we'll send that link out as well. But yeah, once again, thank you all for your time, and this concludes our Zoom meeting.